What's up, YouTube? It's Joe Cachapolia sitting on the couch, making some money investing in fractional real estate online, as usual. Uh, Today, I'm going through my November portfolio results for Mogul. You know, we're always 1 month behind as far as we get paid in December for how the properties performed in November. To say this month's dividends were a disappointment is an understatement. I'm going to go through each individual one and tell you a little bit about what's going on, although I think there was just an overall theme. I want to also mention they did their webinar this evening. If you're not watching these on a monthly basis, but you invest on Mogul or you're thinking about investing on Mogul, I highly recommend you watch their webinars. They always post the old ones on YouTube after the fact, but I think watching them live and actually asking questions is useful. They had a lot of insight, or at least provided some insight into why performance is down, especially for a lot of the STRs, and even a little bit on the pad splits. And they often will launch a property, and they did. They launched this one here, the Rudolph, which is a pad split in Mesa, Arizona. This is right near the roads, which is one of my best performing properties. And so I'm going to take a hard look at this, but I'm not doing that today. Right now, I'm just going to get into the portfolio, but I wanted to mention it. It doesn't look like it's selling out too fast, although it's only, they just dropped it, maybe 6 or 8 hours ago or something like that. Try to get a video out for this tomorrow night or tonight, depending on when you see this. It's 2:30 in the morning. So anyway. Jumping into the portfolio. So yes, big dip from the prior month. And let's see what caused that. So one, they talked a lot about how most of my portfolio, or a very large chunk of my portfolio, is their Houston area short-term rentals. The very first one I bought a $5,000 chunk. I didn't realize how often they'd put out properties, so I thought that I'd only pick up 4 or 5 this year instead of the 15 that I got. And so once I realized their pace, I scaled back the amount I was investing in each one. I'm trying to not have too much of my net worth on any one of these fractional platforms until I feel really good about them, right? And even though I've talked very highly of Mogul, you can see the hiccups as far as income goes. I could be wrong about them. I really don't think so. I think that it's perfectly normal to have some down months. And then they were talking about how the government shutdown affected travel quite a bit. I know we saw that here in San Antonio, so I expect that's probably, had a large impact on the short-term rental business. And so, even though I was hoping November's often a good short-term rental month, at least here in San Antonio, so I was expecting a good month in the Austin one, the Dallas one, and the Houston one, but it was rough. And so whether or not that shutdown really is the reason, it looks like, they gave us a memo for each of these. They mentioned that and said, hey, but we're working on it, and we have a whole bunch of bookings over the next few months on the calendar. So this is a good sign, right? And this property is one I had a really high hopes for going into it, and early on it performed well. You can see the cash on cash returns down to 5.6%. If you remember, I mentioned this in another video, some of the months where they're giving us a 0, they're actually using some of the reserves that we put in up front. And so really, if you want to, it should be looked at as a negative cash flow those months. And the return would look a little bit different than what it is. So I don't really love the math that they're doing to calculate these annual yields. But I do, I've been a fan of the very large reserves that they're using on these properties. And it makes it so we're not paying in on these months, and we're not getting behind or having some issue like we're seeing on some of the other sites. So anyway, another big 0 for the Axelrod. I mean, you can see it's, this is probably one stay. I don't know. It's a very small gross rental income. The roads, this has been one of my most consistent, and, it is a pad split in Mesa, Arizona, and it had a down month. One of the things that they mentioned was, that the pad splits, they do all pay weekly. And so because of the payment dates, November ended up being a worse month because of the way the payments fall. than you might expect. And I guess maybe that's why October was a little bit higher. Maybe they got a little extra revenue there. But then there's in a lot of these, there's a note that in mid-December we're already they expect December to be significantly better than November. Something to that effect on a lot of them. The WAGs, this is a short-term rental in Houston. It's going to be zeros because there is this property was basically it has a title claim going on right now, and so it's not actually operating. I kind of think these operating numbers, I'm not really sure what's happening here, because I don't think that we're paying property taxes and whatnot on this property, because I think it was taken back and we're just awaiting a claim. So I'm not really sure what's happening here. And yeah, that's what they mentioned it, title insurance claim. I basically am just waiting to get this money back. I think that I will. Not a huge investment for me, but I think that's what's going to happen. And that's one of the things that is good about fractional real estate investing. I don't really mention this too often. I just take for granted that everybody likes it for the reasons I do. But if I went and bought one property and had this issue, which is like a really, one of the, you don't run into true title claims that often where there was a loan that didn't get picked up by title and then the property got taken back. If this happened on, if I was only buying individual deals and so I'm not buying very many, this would be a huge problem and a big headache for me. But now somebody else is dealing with it, right? Mogul and their attorneys, not me. And it's a very small part of the portfolio because I have 15 properties that I've bought with them. So it is a good example of something that would be catastrophic if I'm buying 1 or 2 properties a year, and not a very big deal at all if I'm buying 15 on here and 15 on another site. And so I like that. Okay. The Mafee, this is another, what is this? This is a pad split in Decatur, Georgia. This one had been a pretty decent performer for me. And, still okay, right? And overall, 9.77% annual yield. That's a great one, right? Not, obviously the WAGs is pretty far down. I didn't tell you on the roads. Yeah. My average is still 10.63% on that one. So still seeing really strong performance from some of the pad splits, even though, okay, we have a down month. The Johnson, this is a short-term rental in Austin, Texas. You can see it didn't have a terrible top line revenue, at least relative, I guess October. This 13 looks like maybe it's the worst that we can be and still have, some cash flow. So we're having another negative, not a huge negative, especially relative to the reserves that we have that they raised on these, right? So, I'm not worried at the moment, but we obviously need to not have many repeats of this for this to be good. And again, because we started off pretty strong, okay, 5.5%. And to put that in perspective, right, think about like the ARC 7 deals I bought recently, right? Like, okay, their top dividend yielders are like 5.5%, or they hardly have anything that's above that, and a lot of them are 3 or 4. Or Arrived Homes is the same way, right? Or Real Bricks is advertising a 6% dividend yield on theirs, and although I think that they're playing with their math a little bit when they get to that 6%. Because it's like based on the purchase price, not on the total capitalization. So these yields are based on our total investment in the property, right? The reserves and everything. So yeah, even though this one, okay, we're having a down time, we maybe didn't buy it at the ideal time. We were still experiencing the initial turnover from buying a short-term rental and changing management. And okay, we've still done 5.5%, but again, I guess this should be a little bit worse because we have those negative months where the math isn't the way I'd be doing the math. The Celeste, this is another short-term rental in Houston. Yeah, another short-term rental in Houston. Let's see, what was this one? This was little bit of money. You can see we're not doing great here, but it's the same sort of story, right? Okay, it's only 33% occupancy in November from some late cancellations that they were unable to refill. So you can see this story over and over again, but already have booked more than 14,000 over the next few months. That's a pretty big number, if you look at how we've been doing. So feeling like hopefully this is a temporary blip. And again, this is why I've been conservative. I've been going slow. I'm not, not all in on any of these over the next year, couple of years, as I see, as we start to see some smoothing, right? Some averaging of what returns look like. And that's why I'm doing this. I'm trying to share this with other people. But yeah, I mean, 3.3%, that's a pretty sad current annual return for the Celeste. The Victor, this is a pad split in Atlanta, Georgia. This one, let's see, I think actually is one of the best performers I have this month. Yeah, and and it's been really strong all the way. Had one move in the tail end of the month and is fully occupied going into December. Yeah, I mean that's great, right? So this is one I wish I had bought more than $500 of it. Over time, as I understand more which ones do better and worse, maybe I'll do a little bit better than that. But yeah, I'd love to see a whole lot more like this one. The Andres, let's see. Yeah, Decatur, Georgia, another pad split. And this one, yeah, another one that's had pretty solid performance across the board. Do they have any good note? Yeah, there was one one turnover that happened mid-month, but we're fully occupied going into the December. So looks, that's good there. Chelsea, another pad split, right? This one, we had an increase in OpEx, right? And so that hurt us a little bit, but I mean, we still had some decent cash flow. And yeah, I mean, this is, decent cash flow. This is fantastic numbers, right? And what do we got here? Fully occupied, no flips. How much of this one do I have? I got a little bit more of that one, so that's good. The Ratliff, what are we doing here? This is, again, Douglasville, Georgia, pad split. I feel like, yeah, we lost some money on this one. We had a big OpEx. One of the things, there was a question about this in the webinar, and they basically, just said, this happens from turnovers, this happens from replacements, so they don't, we don't get the specific info, but just because it's gone up, there's no reason to expect that it's going to stay up. But yeah, so, okay, we had some expenses that sort of killed our return this month, and that's going to happen, right? So I'm okay with that, especially on one like this, that, okay, even with that, we're still at a 7.18. Yeah, it's not the best performer, but definitely. And that's one of the reasons why I'm trying to get a whole bunch of these too, right? Because you're just not going to know up front. I'm trying to rule out ones that I think there's a lot of risk in, but we're not going to know up front, which ones are going to be the best and worst performers, because some are going to overperform, some are going to underperform. If my portfolio on average gives me a good return, that's what I'm looking for, right? Which reminds me, one of the things I wanted to talk about is. There have been several deals that we passed on that Mogul ended up not closing on. So the Sheffield, the McElroy, and I think the Roja or something. I think all three of those, maybe not the Roja. I don't know. But so they had inspection issues that were worse than they thought, and they had appraisal issues that came in low. And so because of that, they didn't close. I am happy to see them not closing on deals that aren't working out like that, right? That they're not trying to force it and make it work. I'm very happy to see that, because that means they're looking out for us as investors, not just trying to close deals and earn fees. I think the fact that it's multiples that we passed on, I think that's a good thing. Or that I passed on, it means like, okay, maybe my sense of their valuation being off was right on those ones. They did also talk a little bit about valuations and why they're paying up a little bit on these pad splits more so than I would like to. And so, watch that webinar if you want to hear their take on that. Also, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. As always, though, please do your own due diligence on any of those sites, right? Don't just invest in them because I do. And the same thing with any of the properties that I buy. Just because I like them or don't doesn't mean that should be what you're doing. Also, in the description of this video, there's a link to the Discord that I have set up. And we've got about 200 fractional real estate investors in there. We talk about a lot of different platforms, talk about deals, share some due diligence info, that sort of thing. So please feel free to join that, ask some questions and whatnot. Okay, back to the portfolio performance. I've got the Ratliff. This is one. This is another pad split. This one is in Douglasville, Georgia. Again, I didn't realize I have a couple of Douglasville. It is. Let's see. How do we do? Yeah, we didn't cover our debt service this month, right? And what happened? OpEx going up again. Is that, or is that the one I just did? Oh, that is the one I just did. Okay. All right. Did I scroll up? Is that what I did? I think I scrolled up. Sorry about that. That's why it seemed like a repeat, because it is. Okay, sorry. The Ven, this is in Little Burn, Georgia. This has been one that, I don't know, hasn't been a great performer as far as pad splits go in my portfolio. What do they have to say about it here? One tenant moved out during week 1 and was filled near the end of the month. The revenue will be posted in December's payment and is fully occupied going into December. So we'll have to see how we do in December. And also, so we didn't have, in addition to, maybe not having full revenue, although, it looks similar to October's, but we also had, again, a big OpEx number. 4.76, not very exciting return. Hopefully we see that go up. But again, like if you compare this to what we're actually getting paid on a lot of the other platforms, we're still doing better, and we're still doing better on average for sure, right? Because this is one of the lower performers. And again, I believe that as these properties become stabilized, we may end up having a little bit less turnover. I don't know how much the management change affects that, right? I think it's possible that it does, though. The Hugo, this is a short-term rental in Dallas. Let's see, what was wrong with it? Yeah, they're saying 56% occupancy in November, so not great. High cancellation rate. Are they saying Houston-wide from shutdown? But I think this is not in Houston, right? Yeah, this one's in Dallas. So a little typo there because they were talking about all the Houston ones. But anyway, they had a shorter booking window, meaning what I think they mean by this is, this is only closed on a few months prior, so they didn't have a lot of time. The further out you have to book, sometimes you're booking your SGR as much as a year out. When you do that, you normally charge a higher rate for those future bookings, in order for them to lock those in. You can see as well, had a pretty big OpEx number on that one too. And, one of the things, hopefully over time, we'll get more and more detail into, what's happening here. What we will definitely see is we'll get a much better idea of what the averages are across the board for specific properties and types of properties, different markets, and I think it'll help us make better decisions in the future. The Pinkman, this was a pretty disappointing one for me. This is it's an Atlanta, Georgia pad split, but this is one of the first ones where they bought it and they had the seller do some renovations for us. We have both a big dip in rental income and a huge increase in the OpEx, and so this is one where we're dipping into the reserve again. And what do they have to say about it? We had one move out which remained vacant going into December, but as of mid-December, the vacancy's been filled and it's at 100% occupancy. But so I would expect December is not going to be amazing either, and so this probably represents the turning over the room, right, and also the worst revenue. I don't know. It's a big dip, but I think also too what we mentioned or what they mentioned as far as like the timing of weekly payments too. I think would have impacted this as well. And then the Gilmore. This was one. Where is this one? This is in Tempe, Arizona. It's a pad split. Very, very tiny payment on this one, especially compared to the month before. Big dip in the rental income. OpEx stayed the same basically. And they said, okay, had one move in early in the month. And so when you have the move-ins, you lose 10 days of revenue from that room. One at the end of the month. Going into December, though, fully occupied. So hopefully we see a better number there. The other thing, too, is the prior, this one is we had no debt service, right? Yeah, this is the first month we're picking up debt service. So hopefully we see a return to, we're not going to see this number again, but hopefully we see something better there. And so, right now our average is still 11.2 on that. And then the Swift, this is in Glendale, Arizona. It's a short-term rental. They just recently closed. This is the first month, and this actually reflects only one single booking, right? So they had to go through their post-closing. They had to set up, transition property management, and so it's only one stay. Not a huge deal. It is interesting to me that somehow we still pay the debt service though with a recent closing. I'm not sure why that would have been. Because usually, we get a month of operation. You close and then you have time and then you do that. But maybe their turnover took longer than I think. I don't know. Anyway, that's the total portfolio. Let me give you the overall number as far as, my overall annual yield, 6.2%. This is annualized. Now, again, a couple of things. This is really dragged down by the very large concentration I have in the short-term rentals. The biggest one being the Axelrod. So I don't think this is really representative. Like if I just looked at my pad splits across the board, I'm sure it's much better. And also, I do think, I think that the, it depends, right? Like if we go into a prolonged recession, yeah, maybe we see bad numbers like this for short-term rentals for a long time. It would be problematic. I don't necessarily believe that's going to be the case. I think that overall, I'm expecting this number to go up. Maybe not next month, but I think that on average it will. I've also got the WAGs in there as a 0. I think there's a lot of, idiosyncratic things that aren't necessarily going to be recurring all the time. But we'll see. I'm still optimistic about Mogul, but, having a month like this, just like in September, right? Having where is it? Let's see, my monthly yield, my monthly rental income payout. Yeah, just like how in August and September, it was like, oof, October, okay, feeling a little bit better. November, again, like this is my worst one yet. I'm going to have to go pretty far back. I don't think I've ever had a payout this low, right? And I have more invested now than I did in January. So again, really have to take the time, wait and see how this looks over the course of a year. But at the moment, yeah, it is a little disconcerting. And so it's the whole reason that I'm going slow. They also mentioned in their webinar that they have a multifamily product coming out soon. Very excited to see that. I am going to keep investing, but I'm going to keep being careful, right? And buying into ones that I think make a lot of sense. And again, I mean, like you can see with the Axelrod, like I was really excited about this property. So far, it hasn't performed the way I expected it to. Part of my excitement for it, though, is I think we got it at a good value, right? I think the short-term rentals, they are going to have lower yields on average. But I think that we'll do better on the appreciation side just because the nature of those properties. We'll see if that's the case. I don't know. Anyway, that's it for me for today. Until next time, just going to keep making mistakes so that you don't have to.